Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for September 19th, 2007. Well, today was the day after the Fed, and we had some CPI numbers this morning that kind of confirmed the fact that inflation was not running away with things today, and in tune with that, the market kind of got a continuation rally. Now, this market originally rallied up, it gapped up in the morning at 9:30, and this is the Nasdaq chart showing the daily, and I'm going to switch on over to the intraday. And you can see right here was where we closed yesterday, and this is where we gapped up. And we traded in a range early on, and again, this was on the CPI numbers and a continuation rally slash short squeeze. And short squeeze should be noted here, guys, because yesterday that's what caused a continuation. A lot of times after you push up as strong as we did on the Fed news, you have a little pullback effect. Well, yesterday there was none of that, and as the shorts out there saw that there was no pullback, they were forced to cover as the markets move higher, which again caused a short squeeze. And all in all, what a short squeeze is essentially is pressure on the shorts that causes them to cover their short positions. And what covering a short position is it's forced buying. So you have buying, natural buying occurring in a market that is running, just like yesterday on the Fed. In addition, you have forced buying that's coming in because of short covering. And that just creates a perpetual constant covering effect, or movement up effect, because what's happening there, as the market continues to rise on short squeeze covering, well, more shorts have to cover as it goes higher and higher, as more shorts get squeezed out. So it's kind of like a never-ending cycle there, just over and over again, shorts covering, pushing the market higher. And that's what we saw, and that continued this morning on the gap-up CPI numbers. And basically till about 11:30, where we topped out right here, as you guys can see, the Nasdaq topped out at 2683.02. And then we finally got a little relief, and we came back in a little bit, but nothing really major, and the market kind of got quiet around lunchtime. Then post-lunch, around 12:30 to 1 o'clock, we started to get a little sell in this market, and we sold somewhat, decently. Nasdaq coming all the way down to the point where it was only up about 4 points on the day, which when it was up 32 early on that was a nice move. But it came all the way back down till around this 50 moving average that you can see, and then it kind of hugged the 50 moving average all the way up, pushing back up only to sell off again into the close. And the Nasdaq ended up about 15 points on the day, the Dow up about 76, and the S&P up about 9 points. Now, what was interesting about today? Well, again, we talked about yesterday how this head and shoulders pattern right here, we didn't get the breakdown line, and I'm putting these lines again so we can all go over them. But again, if you want to always confirm positions ways or one way or the other, you always want to wait for specific breakdown prices. And we talked about how you needed to close below this line for the head and shoulders pattern. And here again is a shoulder, head, shoulder. And you needed to close below to signal a breakdown. And that breakdown would basically trigger us to break down to this low here and ultimately down to here. Well, they didn't allow that to do that here in this market. And that's exactly what we saw yesterday when they reversed this market on a FedEx surprise, when they cut the discount rate and the Fed funds rate by 50 basis points. And that caused a mammoth rally yesterday, closing right at the highs. And today we continued that rally up, but again, we kind of came back in by the end of the day here. And you can see this little doji here, this candle right here, where it's we closed basically where we opened on the chart, and that's the way it looked. And again, that's basically where we opened. The Nasdaq opened about 15 points higher. We closed about 15 points higher. Even though we had some fluctuations during the day, you can see we were all the way up to here and all the way down to here. Now, what are we looking for? Well, we took out this high right here yesterday. That signaled that we would probably move up today, which is exactly what happened. In addition, what else do we see? Well, until we actually break the high here, we can't really say that we're officially out of the woods yet. So we still have another move up to over 2,700 before we can officially say, okay guys, this market has, because right now we're in a downtrend, and until we continually see how this line even connected there is a downtrend. So until we actually break out and cause a higher high and this line can be drawn up, we have to believe that at some point we have to be careful, because they could either spike this market down or spike it up. Okay? And one thing I do want to point out here, guys, is that this could be a new support line right around here. The close of this point right here, and this line here. And what we could see here in the near term is a pullback maybe to this line. And I'm finding this line as a key support level, as you guys can see. It basically coincides with the top here, or the close here on this candle, the greenish area, the top of this candle, and right through this candle. And it would not shock me with options expiration on Friday if some funny business doesn't go on. And you guys know how I feel about options. Options are a big boy game. the big boys always end up winning. And if too many people went long here into Friday, with options expiring on Friday, if too many people bought calls here on this spike up, then what are they going to do? They're going to push it back down here. So those call buyers end up taking their loss and just running away essentially, or they expire worthless. So it's a very interesting game that these options are, and the big boys control it to a T. Now, having said that, we still have some major issues in this market. Morgan Stanley reported negative earnings today, or they missed estimates, I should say. They did make money, but they missed estimates. And overall, early on, that stock ran. And here's Morgan's chart. And you can see originally the stock was pre-market trading down here, about down $1. But on the open with this monster rally, it pushed up positive. But eventually it started to fall, as this market did. And you can see it ended near the lows, down $1.48. Now, Lehman was the big runner yesterday, and even Lehman ended down today. So we're seeing a little pullback here in some of these financials, which had really run up to the Fed, which is could be looked at as, well, now the Fed has done their thing, now what? And there's still some issues in this market with the Fed, guys, because what it comes down to is, well, why did the Fed have to cut so much? Are things that much worse than we believe? And even if they did cut, or had to cut here, and if they're saving this economy, they're causing major pressure on the dollar right now. And we still foresee, actually, the dollar to strengthen in a little while. And we're still saying there might be a little more downside here, as we said about a week ago, that there might be a little more downside. And we saw that here into the Fed meeting. But it's nearing the end, we think, and we think that the dollar will begin to strengthen. What you might want to look for is actually the euro to possibly weaken. And that could be an issue here coming in to the market as we go into the next month or so, for the euro to actually weaken against the dollar. The yen, it could still stay pretty strong against the dollar, we're seeing. And that seems to be the new currency of preference. Of course, the yen carry trade could be at risk there too, or if it's even there at all right now. Alright, guys, we basically want to look at the ES chart just to focus in on a couple odds and ends. And again, you can see the spike up here in the market, the spike down here, and then a little bounce up, and then again we are down here in this market right now, or as after the bell. This is where we closed right here, and we actually are trading down a couple points after hours on the ES futures. But that doesn't mean much. Again, only 10,000 contracts in volume. The volume today overall was okay, guys. And again, I'm just going to point out here, the volume, as you can see, was pretty substantial. You had a little lag during lunchtime, but again, later in the afternoon it picked up again. Whether it was a sell-off or a rebound, it still was alright volume. So nothing really unique about the volume here. And again, it was just kind of one of those days where it was a little quieter, not quite as crazy as yesterday. But again, with Thursday coming tomorrow, the day before Options X, there could be some interesting business here. Either a spike up or down in the markets. I'd lean towards a move down just because we had such a big spike up. But again, we'll find out what happens Friday. By midday Friday, most contracts should be closed out, and then we can get back to normal trading on Monday and really evaluate the technicals and see what's going on. Now, the other thing I want to bring up as we look at the intraday chart here, and again, I'm just going to go back to the Nasdaq. This is the Nasdaq Dailies. You guys can kind of see what we're doing here. And one thing of interest here is you can kind of draw a couple lines here. All right, and you're going to start to see some interesting pattern formations here. And I'm just throwing these out right now, but we can look for certain breakdown points, and we will if we happen to come back down. But right now, I think this line here on the Nasdaq, the topping areas, is the major support now. And this should be the major resistance up here. So right now, we're in a trend right here on the Nasdaq, up and down in between these two lines. Alright? And it's a matter of which one do we close below or above, giving us the next leg up. But until then, I kind of foresee that the Nasdaq is going to trade in between these bars. But again, we do look for possible close below. I don't think we're out of the woods yet, guys. There's still another shoe to drop, so be careful whatever you're going to do. Don't go all in either way, alright? Now, the other thing I want to talk about today is a little day trading action. And, you know, one thing about dropping interest rates, what it does is it causes the small caps and mid caps to run. And we've been kind of in that slower period over the last couple months where small caps really haven't taken a front seat. It's been the large caps. And finally, what we're seeing in the last 2 days, and it's coincided with a phenomenal move here in some day trading stocks, we're finally seeing some big moves, guys. And I'm just going to point out some charts here. DSTI. All right, look at this daily move. This is a daily stock. It was a $4 stock today, went over $5. Let's see another one here. A CTIB. All right, look at this move up here. Basically from $4 to $4.71 today. Okay. How about another one? Let's see. NTWK. These are all smaller stocks. Look at this stock here. It was basically $1.60. Went as high as $3 today. All right. FFHL. FFHL here. Another nice move up here on the daily. These are big bars, and what you're seeing here is when they lower rates, small stocks, those micro and small caps and mid caps, that's what they run on, guys. They're the ones that need to borrow the most money out there because they don't have a lot of cash on their books, and they're the ones that need to grow the most. So they need the cash. So lowering rates can trigger a big move up here in some of these smaller stocks, and that's what we specialize in the day trading chat room. And as those that were in the chat room saw today, there were some great moves in day trading stocks, and we did some nice trades today, and we expect that this will continue. So I do say that if you want to get involved in this, you want to do it at this point where we're having this volatility and up moves in these smaller stocks, because that's where the bread and butter is, all right? You can make 10% on an intraday play very easily in these small stocks. DSTI is a perfect example, going up almost 30% intraday today from the lows to the highs. The other one is the swing trade alerts, which we have right now. It's phenomenal, and I encourage everyone to join the swing trade alerts. Guys, have a wonderful day. We'll talk tomorrow.